The Terra Luna story. What on earth happened? The Terra Luna has already lost about $100 of its market value, but USD appears to be approaching the peg level again after hitting a low of 0.29 US dollars. The road, however, is still a long way off, and this has wholly rattled the market. We will further talk about Luna USD story. So what happened? The collapse of the Luna crypto network is reported to have wiped approximately $60 billion from the digital currency industry. Tether and USD coin backed by actual dollars or assets housed in a bank is not the same as algorithmic stable coins. Do Kwon, the co-founder of Terraform Labs, where the sister coins Luna and Terra USD were housed, has been arrested. Terra Network and its CEO Do Kwon ascended to prominence in the cryptocurrency industry over 4 years only to crash and burn. The Luna crypto network fell in what is considered the worst crypto meltdown ever, wiping away an estimated $60 billion and shaking the worldwide digital currency market. Luna crypto has two stories, the Terra USD stablecoin and the genuine Luna coin. When Luna and USD went down, there was a significant liquidity crisis in the cryptocurrency market, resulting in an even more devastating loss of value. The crypto community has yet to recover. What precisely is Luna crypto? According to Terra's white paper, the creator's purpose was to fulfill what Bitcoin initially intended, a peer-to-peer electronic payment system. Terra employs a system of stable coins, cryptocurrencies whose value is tied to various assets like commodities or fiat currencies. The most popular is UST, which tracks the price of US dollars with one USD token hovering around the $1 mark. Its peg to the dollar is achieved using the ecosystem's other token, Luna. Over the last year, the Luna token has seen an extraordinary price increase. Luna began trading at 0.66 US dollars in 2021 and ended the year at 89 US dollars. It reached an all-time high of 104.58 US dollars on March 9, 2022, when most other cryptocurrencies were plummeting along with global markets due to the Ukrainian invasion crisis. USD has risen from relative obscurity to become the fourth largest stablecoin after Tether, USD Coin, and Binance USD with a market valuation of more than $15 billion. What happened to USD? What happened to UST? Before we go into the details of this crypto tragedy, let's take a quick look at stablecoins. A stablecoin is linked to a more stable currency like the US dollar. Tether and USDC are both connected to the US dollar. Stablecoins are intended to protect against volatility in the cryptocurrency market. Let's imagine the price of Ether is 1,000 US dollars. One Ether might be exchanged for 1,000 USDC tokens. When investors anticipate a drop in the crypto market, they invest in stablecoins to secure their holdings. The USD currency was backed by an algorithmic stablecoin rather than a real US dollar. The notion was that Terraform Labs could utilize creative processes and billions of dollars in Bitcoin reserves to keep the USD pegged without the backing of the Fed. To make USD, you must first burn Luna. For example, if the price of a Luna token was 85 US dollars, you could exchange one pass for 85 USD. This deflationary technique was created to safeguard Luna's long-term growth. To keep the peg, one USD could be exchanged for $1 worth of Luna at any moment. If USD fell in value, traders may profit by purchasing USD and then swapping it for Luna. Both Luna and USD dropped because USD lost its peg to the dollar, which made it a stable coin. Terra USD was hazardous since it was not backed by cash, government bonds, or other traditional assets, unlike the popular stablecoin Tether. USD stability was generated by algorithms that connected the value to Luna. Many experts questioned if an algorithm could keep two tokens stable. Why did Luna crash? The Luna crypto meltdown was triggered by its link to Terra USD, the Terra network's algorithmic stablecoin. Over $2 billion in USD was unstacked on May 7th and hundreds of millions of dollars were quickly liquidated. It's unclear whether this was a reaction to rising interest rates or a malicious attack on the Terra blockchain. The massive sell-offs reduced the price of USD from $1 to 0.91 US dollars. As a result, merchants began exchanging 90 cents of USD for $1 of Luna. After a considerable volume of USD was offloaded, the stablecoin began to debug. Additional people sold off their USD in a panic, resulting in the minting of more Luna and a rise in the circulating amount of Luna. Following the crash, cryptocurrency exchanges began to delist Luna and USD pairs. Long story short, Luna was abandoned since it had lost its value. How has the Terra Luna meltdown influenced crypto trading? In any event, crypto prices had been on a downward trend in concert with the more significant economic turmoil that had begun in the last weeks of 2021. However, their downturn devolved into a catastrophe which some traders compared to the start of the global financial crisis in late 2007. The implosion of Terra, a so-called stablecoin meant to limit volatility in the crypto market by keeping a consistent value over time, was the immediate reason. Unlike previous stablecoins, Terra was not tied to a stable reserve asset like gold or the US dollar. Its stability has instead relied on algorithms linked to its sister coin Luna. Terra's worth dropped from almost $80 or £66 at the beginning of the month to a fraction of a penny. Their failure triggered market panic. Bitcoin's price plummeted to $26,000 US, a 60% drop from its November 2021 record, while Ether, the second largest cryptocurrency, lost 30% of its worth. Coinbase, one of the significant cryptocurrency exchanges, posted a $430 million loss in the first quarter. Although the market has slightly stabilized since the end of May, the prices of several cryptocurrencies remain significantly depressed. Some significant financial organizations, including the International Monetary Fund, have referenced the current catastrophe as confirmation, if any were needed, of this asset class' intrinsic fragility. What happened to the originator of the Luna cryptocurrency? Do Kwon presented a rehabilitation plan for Luna, and things seemed bright for a short time following the first crash in May. However, the currency eventually fell in value. It was quickly abandoned. Terra finally launched a new money, Luna 2.0. On September 15, it was revealed that a South Korean court had arrested Do Kwon. This occurred about 4 months after the demise of Terraform's Labs' two tokens, Luna and USD. Do Kwon and 5 others are presently charged with breaking local market rules. South Korean officials are attempting to cancel Kwon's passport since they believe he is presently staying in Singapore. If this legal action is successful, Kwon will be required to return to South Korea within 14 days of getting notification of the revocation. The ministry is now reviewing the request. Some Luna investors who lost money have filed a lawsuit with local prosecutors alleging that Kwon committed fraud and illegal fundraising. It is believed that over 2,800,000 South Koreans invested in Luna. I hope you liked the video. Don't forget to share, like and subscribe to our channel. Thanks for watching.